Okay, so I can roll in here. I was able to pick up Dollar General the other day for 10 contracts. It's a pretty wide margin on this one. Looks pretty good. The maximum is $500, but I don't think I'll stay in that long. 3,000 for the buying power effect. So it's pretty good. It's a pretty good return. Come back to here. Fran was interesting. I'm really kind of overtrading this at this point. I didn't mean to do that, but I put 2 trades in that I didn't think would go through for Fran, and I ended up getting 30, 10 original at 30. It's 30 cents, and then I picked up one at 45 cents, and another at 50 cents. And Fran was not giving me, it was not giving me any kind of, when I was trying to trade it, it wasn't working very well. There wasn't enough liquidity or something in the options, but apparently this had to do with the fact that why this went through. Why I was able to get high return on it was the fact that at the end of the day, Fran was going out with the earnings after the market close. So let me see if I can pull the chart on this one. Fran, I kind of learned something here. This is very interesting to me. Wait a minute. A second. F-R-A-N. What the heck? Okay, just a minute. Oh, what is going on here? F-R. Okay, I'm not able to pull that up now. I don't know why. Every time I type something in, it's getting anyway, let me go back, just talk about that. Okay, whenever I had, so it works here, yeah, okay, cool. Towards the end of the day, so right at close, it looked like probably the price spiked up as the options got more expensive across the board. Looked like the liquidity went up. People were buying calls and puts on this one. They're probably protecting their positions on the stock, and right at the end of the day is when it was going on. So that's interesting. They had basically at the end of the day they had a spike in the implied volatility because of the earnings after the close. This is very interesting. So I just learned something on that, and if you go back to here, the working one is 0.625. That's pretty good. For a stock that wouldn't trade at for this wide range, wouldn't trade at 30 cents. It's now, 62.5 cents. That's pretty doggone a big difference. So you can see that there's an increase in the because of the volatility. And this is exactly why we want to trade these. So a couple trades in, maybe I'll start to look at that. I think you can put in trades that are end of day or at close, but maybe it's better just to do it manually. But that's very interesting, and let me just see what happens on this one. Let's see, let's go back to here. Now it's working. Good. I don't know what was going on with that. Okay. There's a spike up. Yep. See the volume too. Interesting. So we went from 74.56 and up to 85.74. Wow. That's pretty big. I think what I'll do is see the movement though. I mean, it's not any larger. It's just that people were buying all the options on it and probably hedging their positions on this thing too. I might learning from this. I mean, it might be better just to go ahead and do all the trades at the end of the day. Interesting. Okay, back to this. So here we are. So basically, at this point, I have 30 contracts at a pretty wide margin here, and the stock is sitting right in the center. So it won't be long. What'll happen, hopefully tomorrow, is you'll probably see this line here shoot up. I mean, I should be making, if the stock is like way over here, I won't make much money, but if it stays somewhere in the center here, it should do pretty well. I think the actual earnings was to the positive side, so I'm expecting it to go 41, 42, maybe even 43, somewhere in here. And it'll probably be sitting about right there, where that little curve will go up. But then I should see over in here, the curve should get above the dotted line here, the zero line, which should make someone some money. Alright. This one on Cooper Companies is still out there, even though it's 625 and there's 50 on the limit order. It's still out there. I can wait. That's fine. At this point, I've got too many. I think I've got too much money on here. I'm gonna just leave these three on. I might take Cooper Companies off. Let's leave it on for now, just to see if it works. It's a GTC order, good till canceled. So I'll just leave that on. as you can see here, let's look at basically what you want to do is divide your maximum credit here, 1500, by the BP effect, this BP effect of 1231. So, looks like you're about 11-12% there. Here's 1,000. This should be, math should be pretty easy. FRS. This is a FNSR. Okay. Okay. 1,200 divided by, was it 1,000? That's pretty good. That's over 100% on that one. 120% if we stay in it, but probably won't. I'm amazed that I was able to get that much out of that. That's pretty good. Let's go to here. Dollar General. Dollar General should pay off pretty well if it works. Right in the center. 500 over 3,000. What is that? 60%? I think. My math's not what it used to be. So that's where we are on that one. So look today. This is the amount of money. I'm actually down $500 on it. On the profit loss open, profit loss for the year, same thing. FNSR is giving us a $25 credit, and then Dollar General's down $50. But this is all going to change hopefully tomorrow, or this morning, or this is 4 a.m. Yeah. This again, I think I'm over trading this one. This one here. I don't usually do like 30 contracts at a time. Normally I wouldn't do that. I was just curious to see if I could get anything at the end of the day, and I learned a little lesson on that one. That's really interesting. I will probably, at this point, I'll probably even change this around where this little course or whatever, if I ever do teach anything on it, where I'll have all the trading at the end of the day. Anyway, interesting. Learn something every day. Okay, I'm going to sign off here. I'll talk to you little guys a little bit later.